Verizon CFO Matt Ellis navigated through pandemic disruptions and kept the company's M&As on course. The pandemic drove uncertainty, but Verizon had the confidence to complete M&As and a spin-off during the pandemic because we had solid business operations and a strong balance sheet. The COVID-19 pandemic spurred a series of disruptions, including significant restrictions on in-person meetings that helped to drive a dive in M&A activity, down 30% in the US and Canada during 2020, according to S&P Global Intelligence. But Verizon, the top-tier provider of technology, communications, information and entertainment products and services, took the shakeup in stride while maintaining protections for employees, customers, and other partners. CFO Intelligence spoke with Verizon Executive Vice President and CFO Matt Ellis to find out how the globe-straddling company moved ahead during uncertain times without missing a beat. Advancing despite the disruption. Considering what was going on a year ago, people would be surprised at what we've been able to accomplish in the M&A space, he says. M&As traditionally were done face-to-face, but we, along with everyone else, had to quickly learn new, remote approaches. Certain aspects were more of a challenge. For example, we had to rethink walkthroughs, which are now conducted largely by video. But video collaboration platforms like BlueJeans help a lot. Communication is as important as ever, if not more so. And the fact that some of our M&As were already in progress when the pandemic struck meant that the basic relationship elements, at least, were already in place. Last year, as the pandemic raged, Verizon closed the acquisition of BlueJeans, a cloud-based video conferencing service provider, and announced an agreement to acquire TracFone Wireless Inc., the U.S. leading prepaid and value mobile provider. This March, even as the COVID crisis continued to percolate, Verizon closed a deal to acquire certain assets of Bluegrass Cellular, a rural wireless operator serving central Kentucky. Then in May, the $5 billion sale of Verizon Media to Apollo Global Management was announced. And in a separate $52.9 billion transaction, Verizon announced in March that it more than doubled the company's existing mid-band spectrum holdings, which will enable the expansion of its 5G mobile coverage through an FCC C-band auction. Some companies rein in their M&A and other activity during uncertain times, but we decided that wouldn't derail our plans, adds Ellis. Instead, adapted to the changed circumstances. For example, the toughest part of negotiations is usually near the end, and traditionally we would just about lock up all the negotiators in a room until they sealed the deal. You can't do that now, when the negotiations are conducted on a remote basis, so instead we committed to staying on the phone or the conference call until everything was wrapped. Also, it's not like we shut the door on face-to-face meetings. When they're deemed to be necessary, we comply with CDC guidelines and will meet in person in safe surroundings that conform to socially distanced and other requirements. The success of the $6 billion plus TracFone Wireless acquisition, which is expected to close in the second half of 2021, and the spin-off of Verizon Media, illustrated just how important the cooperation between Ellis and his team, and a variety of Verizon departments and others, was to successfully pulling off the deals, he adds. The TracFone transaction involved a lot of moving parts, and forms a core part filling in the value segment of the U.S. market, where we were previously underrepresented. A cash flow focus. To fund these deals and other strategic moves, Ellis and his team keep a careful watch on Verizon's cash flow. We have a liquidity playbook that provides a basic framework, and we're periodically reviewing and updating it, he notes, adding that the capital-hungry company took away a lot of lessons from the 2008 financial market shakeup that helped to prepare us for the pandemic-driven economic shockwaves that hit in early 2020. One takeaway was the need to have extra cash on hand when disruptions are on the horizon. In March 2020, we raised $3 billion through a debt offering in order to put more cash on the balance sheet, says Ellis. we were able to float the debt at a competitive rate, so we're not worried about the long-term impact on the company's finances. According to the company's 2020 Form 10-K, Verizon maintains a mix of fixed and variable rate debt to reduce borrowing cost risk, although the substantial majority of the total debt portfolio is composed of fixed-rate liabilities. The marketplace is dropping hints that interest rates may head north, so Verizon's decision to stack the deck with fixed-rate debt is looking better and better. We target a range of fixed and floating-rate debt, Ellis confirms. We also aim to strike a balance between locking in the lowest cost of capital while controlling the overall level of debt coming due in the next few years. The relatively flat yield curve environment that we've seen during the past few years enabled us to float 40-year paper at competitive rates, so the opportunity cost of taking on long-term financing, compared to, say, 5-year notes, has been minimal. At the same time, our fixed versus float policy is flexible. We consider the yield curve and what trends look like, and our team adapts the balance sheet accordingly. The good news is that we've got competitive fixed-rate long-term debt on the balance sheet now, but when it matures, we've got the flexibility to replace it with short-term paper if the yield curve's significantly steeper at that time. That kind of flexibility is a recurring theme for Ellis and his team. We're open to diversifying our funding sources, he adds. For a long time we relied on the U.S. bond market, but we've expanded to the European, Canadian, Japanese, and other markets. During uncertain times, flexibility is particularly important, according to Ellis. The nation has been through a few bouts of significant stimulus spending, and although it's helped to deliver an economic bounce, no one's sure what it will mean for financial markets in the longer term, Ellis warns. Coming out of the 2008 financial crisis, for example, a lot of people thought that era's stimulus spending would lead to inflation, but of course that didn't happen. Are we in a 1990s-style bubble now? No one's sure, so our financial team is staying flexible. Ellis and his team take the same approach to growth, and the question of M&A versus organic expansion. M&A is not a strategy. It's a tool to help execute a broader strategy, he explains. If M&A is the best tool at a particular time, we'll use it, but we're not throwing away organic growth. Our capital expenditures run about $17 to $18 billion a year for cell towers, fiber optic, and other assets. The trend now may be wireless, but there's still a lot of wire at the end of the connection. Sidebar 1. Verizon EVP and CFO Matt Ellis has an emotional superpower. He isn't afraid to ask questions. Some people are worried about looking vulnerable if they ask too many questions. But I find out a lot of things that way. When you ask questions and triangulate the answers, you get to the heart of the issue. Planning has been key to Verizon's M&A and other transactional success, says Ellis. We already had good processes and procedures in place, so adapting them to a remote work environment wasn't a huge obstacle. Deals like the sale of Verizon's media group to Apollo, Verizon will retain a 10% stake in the company, which is comprised of well-known brands like Yahoo and AOL, as well as leading ad tech and media platform businesses, involved a great deal of operational complexity, notes Ellis. It wasn't as simple as slicing off the media group and selling the majority stake. Instead, there were many components that continue to tie to our retained operations, so each piece had to be analyzed and separated in a kind of surgical manner that would preserve the benefits for each side. Doing all of this on a remote basis added to the complexity, but we overcame the challenges through extensive planning and keeping everyone up to date on the latest developments. A sense of teamwork, which has always been part of Verizon, also played a big role by promoting and enhancing efficiencies and keeping everyone focused. Similar traits helped the Verizon team to negotiate the multi-billion-dollar 5G spectrum purchase. There were multiple rounds with the FCC every day, recalls Ellis. Total bids were rising by the billions, and we had to coordinate multiple meetings each day to revise our strategy, on a remote basis. Of course, it would have been easier if we could have huddled in person, but we found a way. Sidebar 2. M&As and spin-offs are never simple, and it's easy for misunderstandings to creep in when buyers and sellers can't be in the same room at the same time. Verizon EVP and CFO Matt Ellis acknowledges that there can also be more distractions, including barking dogs and shouting kids, when negotiators are working from home or other non-office locations. But committed buyers and sellers will find a way around that, he adds. Despite the challenges associated with remote negotiations and other pandemic-related changes, the Verizon CFO says he and his team took away some valuable lessons. Going forward, we think some of the changes will remain in some form or another, Ellis observes. Some of the technology-related advances that we and others embraced were probably moved up a bit because of the pandemic restrictions, and we won't lose those advances. BlueJeans and other tools may offer a better way of doing things, and will continue to be embraced. Change is sometimes spurred by outside events, and it's important to consider what new approaches should be retained, what should be modified, and what historic approaches continue to represent best practices. Basics matter too, especially since a company with a strong foundation is more likely to engage in complex transactions during uncertain times. When the pandemic struck, we had an operational business structure that was sound and growing, explains Ellis. Customers want to continue to use our product, and as more people worked remotely and studied remotely, demand grew, and our balance sheet was financially strong. This, along with a cohesive team of professionals, enabled us to be confident about taking on these deals. At the same time, Ellis and his team were careful about curbing their enthusiasm. One initial question, especially as COVID pummeled the economy, was whether our customers would be able to continue paying us, he confides. When the pandemic struck, we stepped up our scrutiny of customer payments and adjusted our scenario planning to consider potential payment stream changes. The CARES Act, Coronavirus Aid, Relief and Economic Security Act, was important and helped the economy with consumer and business financial support. Fortunately, our cash flow stayed strong, but we had plans in place just in case. Our recent analyses indicate that demand will continue to rise, and as the economy regains its footing, customers will continue to be able to pay for our services. So we're comfortable with our strategic growth goals for the next 3 to 5 years.